Welcome to Bears in Exile. Today is October 27th, and it is time for the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, we said last night that we were looking for a reaction at the 200-day moving average, but that we were leery of a gap above it, and that is exactly what happened. Uh, Gapped above it on the Dow, gapped up to it on SPX, and eventually breaking it. Dow up 339 points today. Massive, massive run. Super bullish. We said that the short-term moving averages were still pointing up, and that it was looking good for the bulls. And absolutely, it was good for the bulls. That news came out about a euro deal, which may or not pan out. Everyone thinks it's a done deal. Certainly, uh, at face value, the headlines appear to say that. But I'll go into that further later. But anyways, 200-day moving average clearly beaten today, and short-term moving averages pointing up. We are starting to get the beginnings of excessive separation, but after 340 points, why wouldn't it be? Uh, Beyond that, CCI massively high, stochastics high, 14-day RSI moving average getting higher into the overbought area. We said that we are looking for it to get up here and get the hook. Of course, we have no hook yet, but at some point we will. So just waiting for that. RSI overbought, hooking up, uptick on the MACD histogram, uptick on the MACD. This looks extremely bullish in the daily. Extremely. We had good volume. It was positive volume. Certainly the bears absolutely had to cover, and which certainly helped get that much of a move today. Now, the move is not perfect. We did close well above the upper Bollinger Band. And of course, we have very high readings on most everything. And we were just shy of a 2,000 point run in a month. That is amazing, simply amazing. But we also do not have much in the way of stopping it. It has a ways to go before the lower price consensus level for the previous month, or the major price consensus level of the previous month. Good for between 200 and 400 points to the upside. And if we actually are going up to test the previous high, then we have 600 plus points to go. So absolutely, that is a possibility. Not to discount it. And what else do we have to work with? Going to the 60-minute for divergences, were they totally busted today? The move like that, you would think that they would be. And let's see, we don't have any long-term divergence in the CCI anymore. We have intraday on the 60-minute divergence in the CCI, but that's doesn't have that much weight to it. We have minor divergence in the stochastics. We have kind of minor divergence in the RSI, and we still have divergence in the long-term divergence in the MACD histogram. So not really too much here to hang our hat on from the bearish perspective. We have a few things they can develop further. Certainly they don't look all powerful to reverse this instantly or anything like that. So definitely favor to the bulls for the moment, and congratulations to the bulls. Absolutely. Now what we need to see is a strong, complete candle body closing above the 200-day moving average to establish that it's there to stay. And while there should be some sort of a pushback from being above the upper Bollinger Band, it is entirely possible to get a side tick or slightly lower or slightly higher to put us back inside the upper Bollinger Band, and yet meet the requirement of staying above the 200-day moving average. So if there's any bears left, That's fuel for further moves up. Um, I kind of doubt that they were all squeezed out today, but you never know. SPX gapped up to the 200-day moving average very, very early and actually overcame it the proper way. And we were postulating last night that a really evil move would be the Dow getting above the 200-day moving average, gapping above it, while the 200-day moving average on the SPX remains intact. That did not happen, and this is a very, very bullish day for the bulls. So short-term moving average is pointing up. Everything else essentially the same as the Dow. No need to rehash. Notice the fast stochastic would be nice if it got back into overbought area and meet up with perfect confluence with the slow stochastic and the 14-day RSI moving average. The VIX. Okay, last night we were saying we were looking for confluence in the Dow and the SPX, getting the indicators to go massively high in all of the time frames so that it would be poised for a move down. That didn't mean that we were expecting 300 plus points today, but that is what we got. And we also said that we were looking for the VIX to hold the 200-day moving average, by the time the Dow and the SPX were finished with their confluence. Now, if the Dow and the SPX do get 200, 400, 600 points more to the upside, certainly the 200-day on the VIX should be destroyed. However, for the moment, we are holding above it. There isn't too much room to go, but it is above it. And with the Dow and the SPX being above theirs, really, the VIX should be below it, and it's not. So, once again, not a strong thing to hang your hat on, not a safe bet. Just pointing out that it does not match the way that it should. Ended with an inverse hammer, and a little small one compared to the one yesterday with the big old huge tail. Short-term moving average is pointing down, middle Bollinger Band right in the middle of them, going into a flat line on the long-term moving averages. 14-day RSI moving average massively low, but no hook, no sign of a hook. Slow stochastic pointing down, getting right to oversold, but not into it. Fast stochastic kind of just sitting on it. CCI massively low. Downtick on the RSI, downtick on the histogram, downtick on the MACD. Woo-wee. 60-minute, looking for positive divergence. Do we have any, or was it all destroyed? Well, the longer-term divergence we had in the CCI, gone. Boom. Yes, there is intraday divergence in the 60-minute, but really nothing to speak of. So this, I'll just call it a big fat no. We do have divergence, positive divergence still in the stochastics. We still have positive divergence in the 14-day RSI moving average if this little downtick turns up, which it may not, who knows. Kind of would be nice if it got to oversold also before it tried to move up, but we shall see. So this could very easily break. It's nothing really to go crazy over or anything like that. Very minor, very minor, easy to break divergence in the RSI, and actually we have longer term RSI divergence as well, and we still have divergence, long term divergence in the MACD histogram. So a little bit more there than down SPX. And moving right along to TNA. Wow. It got to 50 today. Ended with an inverse hammer, or shooting star, whatever you want to call it. But we have these short-term moving averages moving up through the bar, middle Bollinger Band below them. TCI massively high. Looks like the stochastics are a little bit tired. They really need to firm up, stay up there, and wait for the 14-day RSI moving average. That would be perfect. RSI getting too overbought, uptick on the histogram, uptick on the MACD. You can also see the short-term moving averages beginning to poke up through the bearish bar, which is collapsing, and yeah, that's that looks really good, really does. And if they're able to break out completely, maybe go back for a kiss and then a bounce off, that will be a guppy entry, and we'll be looking for that. Absolutely, all kinds of room to move to TNA's 200-day moving average, way up almost at 70. UUP. Oh yeah. Have a messy spinning top completely outside the lower Bollinger Band. Warning sign to me anyway. Has not broken the prior major price consensus level. Whether or not that is going to offer some support or not remains to be seen. CCI massively low. 14-day RSI moving average massively low. Boy, I wish I had just followed that by itself this past month, because if you remember, we were calling this out like crazy every single night, and we did not get the movement in the stochastics that we wanted, and it just played out. Wow. Extremely low in the RSI, downtick on the histogram, downtick on the MACD. You know, we should get another tick down tomorrow, I would assume. I mean, if the bulls are, the bulls should have it going on. And but if it were to get an uptick, you would have positive divergence in the daily on the MACD histogram. But I am not counting on that at all. I mean, maybe because it's below the lower Bollinger Band, it'll pop back in and that'll occur. But still, absolutely amazing. We do have a relatively uniform, actually pretty darn uniform separation in the short-term moving averages, and have yet to see any wobble. And FXE, spinning top outside the upper Bollinger Band, gapped above the 200-day moving average. Wow, now that is quite a move. Euro actually getting into the 1.42s. Such a massive move. Short-term moving average is really breaking out nicely against the bearish bar. CCI massively high, 14-day RSI massively high, stochastics very, very high. Good confluence there, waiting for the curl. RSI massively high, uptick on the histogram, uptick on the MACD. Massively bullish. It just is. It just is. Now here's the point where I think that the swerve will come. I think that we will get a swerve. I think it'll be France being downgraded, losing its AAA status, or some kind of rock being thrown into the works of the Euro plan. But if that doesn't happen, whew, the previous high is on the menu. On the menu. All you can eat. So going to need some NDEs, or this sucker is just getting underway. GLD, our second VIX. Look at that. Another big update, closing above the upper Bollinger Band. Short-term moving averages breaking through with ease. The long-term moving averages, which are a flat line. CCI very high, stochastics very high, 14-day RSI moving average, all kinds of room to move. So is this indicating that fear is going to increase, or that the dollar is just going to drop? I guess you have to pick. RSI very high, stochastic, MACD getting an uptick, and the histogram getting an uptick. SLV. Wow, look at that. It's like a inverse hammer. Kind of amazing that gold is doing so darn well compared to silver. I mean, we said we've been expecting a retest of the bar, And maybe we will get penetration into the bar. Maybe it'll put the hurt on the bar. We don't have full separation as of yet, but I suppose it's possible. CCI very high, stochastics very high, RSI 14 day, plenty of room to move. Uptick on the RSI, still have a little bit of room before overbought. Uptick on the histogram, uptick on the MACD, and I'd be expecting more of this, but I guess we'll see as well. And there you have it, just watching with fascination. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.